Yeah, I think that's most of it. I mean, since the war started, it's interesting. Bitcoin has performed better than gold.
Uh-huh.
But I think again, that's because gold moved so far last year. I mean, gold was up, 65% plus last year. So Bitcoin is in my view long overdue for doing that big catch up compared to gold. And you and I have done this before. We've looked at the chart that compares the two, and on the Bitcoin gold ratio right now, Bitcoin is incredibly cheap compared to gold. But I think
Yeah.
nominally, because the money is in the process of failing, nominally they're both going to go higher. I mean, I expect this year to see gold go to 6,000, maybe seven. But I expect Bitcoin to double or more, sometime in the next 12 months, maybe even higher. I mean, it's really been suppressed, and as we all know about the most recent strategy news and how much the STRC, the stretch they're selling, they're buying multiples of the existing mine supply, and there's a point in time at which there just won't be enough to satisfy them at this level, and it'll have to start going significantly higher.
What if everything you've been told about money is starting to fall apart right in front of us? If the global financial system isn't just under pressure, but slowly losing its foundation in ways most people aren't noticing yet? And what if the assets everyone is ignoring today end up being the ones that define the next major financial cycle? Because according to macro investor Lawrence Lepard, we are heading toward a major turning point in the monetary system, a moment where inflation, debt, and policy decisions collide in a way that could completely reshape how we think about money, savings, and long-term wealth. And in that environment, assets like Bitcoin and hard money could move from speculative to absolutely essential. In this video, we break down his view on what's really happening behind the scenes, why the current system may be more fragile than it looks, and what it could mean for the next major move in Bitcoin and the broader economy.
Look, I mean, more and more people slowly but surely are coming to understand what Bitcoin represents. And I think this next bull run is going to be, it's going to shock some people. I mean, I think, I know people, there are people who are calling for 50,000, 40,000. And one idiot was even calling for 10,000. That's just not going to happen. I mean, I have friends who say, well, I'll wait till it goes to 50,000, I'll buy it. I say, no, you won't. One, because it's not going to 50,000. Two, because I know that if it goes there, you'll be chicken. You'll say you want 40. And so, my view is this next run is going to take us easily over 200, maybe 300 or 400 on a spike. Who knows? But there's been a lot of paper Bitcoin created, in my opinion. I mean, if you look at the statistics on, perpetual futures and stuff, and I think that's really kind of held it back. But all that paper has to be covered, and it's all algorithmically driven. And when we break through certain levels, you're going to see people who are short it realize that they're facing an existential threat, and then of course they're going to have to come in and buy to cover those shorts, and that's what's going to take us up to prices that are going to be pretty impressive. So. That's all to come in the future, and I think it probably happens this year, primarily because it feels like we're coming to a head on this war and on the monetary situation. I mean, I don't think. I mean, it's almost, and there's a whole part of me that actually kind of thinks all of this is planned, and I've gotten to be more friendly with and more facile with the thesis of Simon Dixon, who kind of believes that there are guys behind the scenes pulling the strings, and that they actually are intentionally trying to croak the dollar as the world's reserve currency to go to a multipolar system, because as a practical matter, we kind of have to. I mean, we've hit the end of the debt road. We can't kick the can any further. It's time for a monetary reset. His thesis is actually that what we're doing here is intentional. I don't know if that's true or not, but it's certainly. I look at the Iran war and I say to myself, this just does not make any sense unless you really want to, debase the dollar and get the U.S. out of the Middle East, because we're not doing particularly well.
Right.
Yeah, I think a lot of it is the fact that all the juice had been squeezed out of Bitcoin, and the sentiment was absolutely dreadful. And as we all know, there was that one spike down to 60K, and of course everyone thought it was going to go to 50 or 40. It didn't. Yeah, I think that's most of it. I mean, since the war started, it's interesting. Bitcoin has performed better than gold.
Uh-huh.
But I think again, that's because gold moved so far last year. I mean, gold was up, 65% plus last year. So Bitcoin is in my view long overdue for doing that big catch up compared to gold. And you and I have done this before. We've looked at the chart that compares the two, and on the Bitcoin gold ratio right now, Bitcoin is incredibly cheap compared to gold. But I think
Yeah.
nominally, because the money is in the process of failing, nominally they're both going to go higher. I mean, I expect this year to see gold go to 6,000, maybe seven. But I expect Bitcoin to double or more, sometime in the next 12 months, maybe even higher. I mean, it's really been suppressed. And, as we all know about the most recent strategy news and how much, the STRC, the stretch they're selling, they're buying, multiples of the existing mine supply. And there's a point in time at which there just won't be enough to satisfy them at this level, and it'll have to start going, significantly higher. So it's clearly creating some supply, some artificial supply. But the people who sold it short, who basically sold a contract to somebody who wanted to buy Bitcoin, they're going to have to cover those shorts at some point. They're going to get their face ripped off if this thing starts moving quickly. And in this instant transaction kind of world, they've got all these kinds of algorithms and other things set up such that once it starts to move and move hard, they're going to come in a big way to unwind those positions. And that's how and why we get these huge amplitude swings. I mean, one of the things, I mean, there's some great documentation. If you go back in the 70s when the gold wars were occurring and, the London gold pool was taking place, there were some things written by Kissinger and others who basically said, look, if we make this gold price so volatile, people won't want to buy it because it'd be just too scary to buy it if it has these big ups and big downs. And boy, does that ring true with Bitcoin as well, right? And so, there's an argument that the other side of our trade likes the fact that they can hold it down and then let it rip and then hold it down and let it rip, that the volatility, and that does scare a lot of people away. I mean, I think when I try to convince people to buy Bitcoin, probably other than, well, it's crypto and it's FTX, and once you get them through that, then you have to get them through, you do understand this thing could go down 50%. And the average person is loss averse. They're not necessarily profit maximizing. I say, yeah, you're right, it could go down 50%, but it also could go up 4x. And, if you think the balance of the two is maybe a 50% chance of each, 4x up versus 50% down, that's a mean expected value. You should do it. And so, the Bitcoin suppression, I think, that occurs through volatility, it's very real. But again, I say that I don't think they'll be able to do it the way they did it with gold because of the existential threat of a 5x move. Because it's so volatile, when it starts to happen, when it really, this is Samson's God candle, when it really starts to move, the people who are on the wrong side of this are going to have to buy or they're going to face an extinction event. So all of that suppressed demand, all that suppressed paper demand is going to come into the market at one time. And that's why, it's my belief that when this thing really does move, we're not going to 126. We're going to 200 or 400 or some bigger number, but it's gonna blow through that, by a significant amount because people are gonna, the shorts are gonna be trapped, and it's possible that there are gonna be some BKs, some bankruptcies on some of these shorts. I mean, the other thing is TradFi, who I know TradFi players have done this, who, for example, they shorted, and it was a decent trade for a while. They shorted Bitcoin while being long the Mag 7 because they were so heavily correlated and they wanted to be long the Mag 7, but they were concerned about, the risk of the valuations. And so they shorted Bitcoin against it. And to me, that's just an incredibly stupid trade because the Mag 7 is overvalued, Bitcoin is undervalued. But, for a while it worked. But when these trades reverse, they can really reverse with a vengeance. So I'm not long-term concerned that they'll be able to paper over the Bitcoin market. There are other people who take the other side of that, and they have an argument. They could be right. But remember, at the end of the day, it's very easy to verify and demand, proof of coins. And, a derivative does not represent a proof of coin. And so, when things start running hard, the people who are short the coins are going to be in a lot of trouble, in my opinion.
Lepard argues that we may be getting close to the end of the current monetary setup. Debt is extremely high, and the system relies more and more on creating new money just to keep things stable. But that solution comes with a cost: inflation. And according to him, inflation may not be over yet. In fact, it could come back stronger than people expect, possibly even reaching double-digit levels again. When that happens, confidence in traditional money can weaken, and people start looking for safer places to store their wealth. That's when hard assets matter most, things that can't simply be created out of thin air. Gold is one example, and Bitcoin is increasingly being seen as another. And one of Lepard's key ideas is straightforward. Bitcoin is like digital gold, but with even more advantages.
Absolutely. It certainly seems that way. Yeah. Gold right now is at 4,800. That's a bold call, $6,000 gold before the end of the year. What makes you consider that?
It's still the go-to first choice of governments and a lot of, large institutional investors. I mean, Bitcoin, I think, is going to go further, faster, be a better performer. But you've got to remember, I mean, it's funny. I mean, we're early in the gold world. We're super early in the Bitcoin world. I mean, remember that still, the allocations, the portfolio allocations to gold, across the spectrum. And this will be in my quarterly report, which should be out tomorrow, Friday. It's still like under 4%. I mean, nobody really owns gold. Everyone thinks, oh, gold went up a lot. It's a bubble. It's a time to sell gold. I mean, no, gold has been so suppressed for 20 plus years that even after it goes up a lot, it's still cheap. And if gold is cheap, Bitcoin is even cheaper. But the reason gold has outperformed Bitcoin in the last year or two, last year and a half, I would say, is because at the sovereign level, there are very few sovereigns who really understand Bitcoin. I mean, the UAE does, and I think Russia does. I don't think China fully does, but there aren't sovereign banks and investment funds buying Bitcoin. There are a few small ones, but there are no major ones. Whereas there are plenty of sovereigns and central banks that are buying gold, and that continues and persists. So gold is kind of the first choice as the money fails. But once gold has done its thing, Bitcoin's going to come racing by because everyone's going to kind of come to the conclusion that Bitcoin is a digital form of gold, which it is. And, there are all kinds of great use cases. I mean, like one of the really interesting ones, I'm sure you saw it and I noticed it as well, was, if Iran is going to start charging a toll for oil to go through the Strait of Hormuz, and they said, hey, yeah, we're going to do that. And by the way, the payment's going to be required in Bitcoin. And, I thought, well, that's interesting. They can't collect gold. What are you going to do? Run a bunch of coins or borrow gold out for every ship you send through? But in the past, I would have thought, well, they'll use stable coins. But then I did some digging and some research, and I discovered, you know what? The U.S. is really, they've got their arms around Tether and Circle, and they've now been able to sanction stablecoins. And, the stablecoin market grew and came into existence primarily because we threw these countries like Russia and Iran off the SWIFT network, so they couldn't move money easily. We weaponized the dollar. Well, okay, that was what led to stablecoins. Well, as it turns out, in my research, I discovered that about $4 billion of stablecoins have been seized. So, the Iranians aren't stupid, and if they want to get paid, they're going to get paid in something that the Western financial system can't grab. And the only two things that fit that model, is sovereign money that's independent from the system, are gold and Bitcoin. And obviously, gold's clunky. Bitcoin's as easy as a 10-minute transaction. So I thought that was a very interesting development.
Can you sort of explain, in your experience, having seen this with gold over many decades, what might be going on with Bitcoin right now and what you mean by paper Bitcoin?
Sure. I mean, I think that just what happens in any given market, there's actually the physical. And Bitcoin's not physical, but there's effectively the physical. I mean, they're the keys and the coins, and that means you own title to those coins. And then on top of that, people can create a derivative, which is to say, I can say, hey, Joe, I'm going to sell you a Bitcoin for $75,000. And you can say, fine, I'll send you $75,000. And now Larry owes Joe one Bitcoin. And so your demand for Bitcoin, your $75,000 that you wanted to spend to buy a Bitcoin, rather than going into the market with a broker and buying the actual Bitcoin, you bought a Bitcoin derivative from me. And now I owe you one Bitcoin. But let's say I don't have that Bitcoin. So effectively, your demand did not reflect in the price in the marketplace. It just reflected in Joe and Larry trade. And so that's a paper transaction without the underlying physical backing it. So in effect, it's kind of a short, because at some point in time, I've got to go buy that Bitcoin and deliver it to you, but I don't have it today. And we saw, like when Sam Bankman-Fried failed, we saw on the FTX balance sheet, he claimed he had a lot of, he had sold Bitcoin to his customers, paper Bitcoin. There were people who had FTX accounts who thought they owned Bitcoin, but he didn't have any Bitcoin. So he basically just sold them paper Bitcoin. So that demand for the Bitcoin that they had did not get reflected in the marketplace, because he just created a synthetic paper obligation. So to those who say, there's no such thing as paper Bitcoin and Bitcoin can't be manipulated, I say bullshit. There is definitely paper Bitcoin. However, there's not nearly as much paper Bitcoin as there is paper gold. They've had 50 years to perfect the paper gold market. They've had 15 years to perfect the paper Bitcoin market. And The other thing I would say is a really important thing to understand is that gold has never gone up 5x in 10 months as Bitcoin did from October of 2020 to, the following May or June. So, actually less than 10 months, like 7 months. So, and that's kind of a rip your face off sort of move if you're short, the paper. A big year for gold is up 20, 30%. There were a couple of years were up 50%. So, and the powers that be at the BIS and the Federal Reserve and, all the central banks, I mean, they have the ability to absorb that kind of loss. They also have a printer to fill in the holes. With respect to the paper Bitcoin, basically, the perpetual futures market, I haven't checked it recently, but it's gotten to be fairly good size, a lot bigger than it was 4 or 5 years ago, but still a fraction of the total outstanding trading on any given day. Not a fraction, but it's not as big as the trading on any given day, and it's not as big as the float that's out there. So
Lawrence Lepard explains that what's happening with Bitcoin today is similar to what has long happened in gold markets, where the real asset and the paper version of it can behave very differently. In simple terms, he says there are two types of Bitcoin exposure. One is the actual Bitcoin that you own yourself, where you control the private keys. That represents real ownership. The other is a paper version where someone promises you Bitcoin through a contract or derivative, but the actual Bitcoin may not exist behind it. He gives an example of how this works. Instead of going into the market and buying real Bitcoin, a person might agree to buy it from someone else through a private deal or financial product. On paper, it looks like Bitcoin has been traded, but no real Bitcoin is actually moved. This creates what he calls paper Bitcoin, where demand exists, but it doesn't always reach the real market in a direct way. As a result, the price can be influenced by promises and contracts, not just real buying and selling of Bitcoin itself. Lepard also points out that this idea is not unique to Bitcoin. He compares it to gold markets, where paper claims on gold have existed for decades and are far larger and more developed. In his view, Bitcoin is still early in this process, meaning the level of paper trading is smaller, but it is growing as financial markets expand around it. Thank you for watching and see you in the next video.